All right, welcome back, everybody. Hope everyone is doing well on this Monday. We obviously had sort of a reversal from the overnight session, and then markets rallied. So it was looking a little not dicey because it wasn't a crazy move overnight, but it was interesting and kind of surprising that it fully reversed basically and we rallied on the day. But anyways, welcome. If you don't know who I am, Ben Collins, CFA charter holder, Chief Investment Officer of Options Autopilot, which is an automated options trading platform. If you want more info on that, check out the description and you can give it a try. I'm basically, trying to be transparent on what I'm doing here. I'm attempting to pay my rent as an example, which is $3,000 a month. I'm also doing some directional trades, which I'm highlighting. So subscribe, follow along if you want to see that journey and appreciate that transparency because I'm showing you the bad and the good. And I'm going to go over how I totally messed up my Intel earnings position as part of it and some other changes and things I'm looking at because a lot of stuff kind of happening in the market in general. And one thing I'll start out with maybe first and foremost is I've talked about this, and again, not that this is some type of, I don't know, future predictions coming true. It's just kind of talking through what can happen and kind of scenario analysis of what will happen or could be possible if things get worse. So if we look at Bitcoin, it's obviously been under pressure recently, and we talked about strategy and Michael Saylor and Bitcoin and how if it gets to a certain level, he would be forced to sell his position. So you can kind of see that it broke down a couple days ago, finally below this line. Obviously, this is the line that I drew. But the market seems to be selling a decent amount. Now, it's still kind of in line with this level right here, which maybe there's some support. But if you look at that pattern, it's pretty large. And it's also, you can kind of see that it's definitely broken this uptrend for sure. So who knows what's going to happen? Maybe this will be a fake out and it'll gain, get all of its support right in this area. I partially feel like that will happen, or there'll at least be enough demand kind of between the $30 to $40 range. Obviously, that's a pretty big range, but I can't imagine it's going to go crazy lower. But like I said, if you get forced liquidation out of strategy or Michael Saylor has to sell, you could just get a bunch of people piling on to that trade, and that's where you could get a bunch of stuff kind of pushing it down. And I don't want to say collapsing because I think it's going to be temporary, but you can see how this is again pushing towards some support. I mean, look at how significantly it's down so far during the year. I mean, for the people that were involved in it, and I don't remember exactly when he converted the business, but now we're getting into kind of pre-crazy Bitcoin levels. So again, maybe we see some support at this level, but this is definitely something to keep an eye on. And I think I brought this up before, and I finally, I think, found I found the tab that I wanted here. So I mean, you can see the 3-month return minus 48%, 1-year return minus 60. This is, again, what can happen in general. Okay, so yeah, I wanted to show like this MNAV. Apparently, I think if it goes to 0.9, then he's kind of in trouble. So interestingly enough, I wonder if he's already been able to reduce or somehow do something to not manipulate necessarily is the wrong term, but improve. Because I feel like the last time people were talking about this, $80,000 was kind of the level where he would maybe start to get into some trouble. So either way, this MNAV, I believe I need to fully look into this. If it breaks, below 1 or even below 0.9, that's when he kind of gets into trouble. So as of now, looks like he should be okay. I mean, you can kind of see how he's laying some of these out. Bitcoin in years of dividend coverage. So maybe not a thing. So maybe it's all overblown, but something to watch just because if it's a forced seller and he's one of the largest holders, it could push things lower. I do think it'd be a good time to be accumulating in that kind of panic / forced selling, but that's just something worth paying attention to. I guess worth noting, I closed my Bitcoin put credit spread strategy automation, not because I was predicting this. I did close it before this actually happened, but it wasn't like, oh, I did it because I thought that was going to happen or it was going to collapse. But it just happened to work out that way, which, again, if you appreciate it, I'm just trying to be honest. I'm not trying to say, oh, I had such a crystal ball, I can predict the future. It was just more kind of risk management, and I wanted to more just fully allocate, focus on the index S&P 500 strategy, just because I might consolidate and just use this just to do like the rent and those types of things, and not do any of the kind of side strategies, but at least for now. So that's closed down to free up some buying power for MES. So that's kind of an update. As we kind of have shown previously, I want to get into showing RIVN. And my computer is unfortunately going very slow today. Maybe it's got a case of the Mondays, but let's just take a quick peek at the RIVN chart, because again, I tried to be disciplined and follow the rules. I think so far it has worked out correctly, as risk management and following the rules should work out. But that's not always the case. Usually it's very frustrating, and oftentimes it's pretty much instantaneous that you're frustrated by following the rules, because things can snap back and basically, go against you actually following and managing your risk. So you can kind of see where this broke down this trend line. I had said I was going to cut my loss. I did cut it here. Now it's trended all the way down here. I mean, I think if it gets into this range, I'll look at the fundamentals again. I still think that it's a good company and the R2 is going to be good, but I feel like it just doesn't have a lot of tailwinds at this point. And I don't know if the company really has a bunch of leverage and levers to pull at this point. So if there is kind of any kind of economic downturn and there's less credit, benefits and incentives for electric vehicles, I would say we had a Tesla. My fiance had a Model S, and we ended up selling it after about 6 months. Because here in Minnesota, the winter, when it's extremely cold, the battery's range is way worse. If I had a long range battery, probably not really an issue. But the fact that it was so variable and you couldn't totally predict how fast it was going to decline out in the cold, that makes it and gives me pause even wanting an electric vehicle, at least in the winter climates. If you're in a sunny climate, it's totally fine, probably a no-brainer, but it still was annoying. The one time we had to charge at a supercharger and spend 30 minutes when you could fuel up in 5 minutes and be on your way. Again, I still appreciate the technology and appreciate what it's doing, but I guess that's just my thought, and I think that they might run into some of those issues as well, to be honest. So we'll see what happens there, but as of now, I'm out and I'm not doing anything new with those options. Basically, took my loss and exited, and we will revisit that later, and I'll talk about it when I do that. SOFI, this is one where I'm probably breaking my rule. I kind of had a line in the sand from a price level standpoint, but I'm not at the point where I'm at my stop loss from a percentage standpoint. So this is looking pretty much like a top when it broke down here, and technically I should have sold right here on this last down candle, but I have not. And as you can see, it's moving lower today on higher volume, or reasonably higher volume, which is not necessarily positive for the stock in a technical standpoint. I still like this stock fundamentally, just long-term what they're doing, but clearly the market is seeing some issues here with the company and doesn't really want to own it at this level. So it gives me pause. If I hit my typical stop loss percentage is 60% loss and close it out. So I'm rapidly approaching that. I'm at 56% loss. So if we have another down day in SOFI tomorrow, I'm probably going to be stopped out of that, or I'll have to close it out. I don't have a hard stop on it, but I should. So check in next time and see if I followed my rules, which I probably will, but I still want some type of exposure, I feel like. And right now you can see my exposure was already pretty low. I only had 5 contracts. Last year I had a pretty big gain in the stock from a percentage standpoint compared to the account. And so I've avoided giving that up. As you can see in my P&L year to date, it's only down $950. I think I'd have to look again. I think I was up 9,000 or something like that last year. So in the grand scheme of things, it's fine. But I'm approaching a stop out, and I don't know if that means it's a broader trend of the market kind of turning over, because obviously today was somewhat of a rally. So we'll see. Let's get to Intel, and then I'm going to talk about why I have a VIX position on, and it's actually on 1 day to expiration. Zach and I are working on implementing the 0 DTE execution. We can already do it, just how to handle expirations, assignments, stuff like that with options autopilot. So if you're looking to do 0 DTE in the future, definitely subscribe. You can sign up for autopilot, and we can let you know when that's fully operational. Again, I'm not a huge 0 DTE person myself. I just do more frequent, longer term options, and I basically do them every day. So it's almost like it eventually becomes 0 DT, because they're going on and coming off every single day. So I don't think you need to do 1 day expiration or 0 day expiration to do those strategies, and it's better to build it out. But I know people want that, and I do think it will add some level of diversification and maybe some level of ability to hedge, and that's kind of what I would be looking to do long term with it. So we are working on implementing that, and that is one of the reasons I have this big position on, just to handle cash settle assignments, and then actual exercise assignments, stuff like that. So stay tuned. What was I going to say? Intel, yeah. Let's cover Intel, and then I'm going to go over the update on the hedge versus the actual kind of one-on-one automations. This is the hedge and this is the automation. So we'll go over that shortly here. But let's walk through Intel, because this was a total mess up by myself. Don't follow me, I guess. I feel like I left probably $2,000 on the table. Again, high in terms of percentage, not high in terms of dollar amounts, because I completely was wrong on what day Intel reported earnings, which is fairly embarrassing. When I looked at it, I just misread either the date or misread the day. And so when I ended up hedging the position, if anyone recalls, I basically ended up hedging the position here. Yeah. So it was 2 days before earnings, and I basically was thinking earnings was after the close, maybe the next day. That was when it actually just ripped higher, because it was, I believe this was like a Thursday, and I did it on a Tuesday. So I was thinking that it was either that day, after the close. But either way, I totally messed that up and missed a huge rip higher, which I probably would have then hedged that out at least partially and captured some of that. I guess it's good in general that I did hedge it, because you can see the result. They had pretty good earnings. Market has been selling decent earnings, which again, a little bit concerning for a long-term rally perspective. When the market's kind of selling good news, obviously a lot better news, or that was kind of baked into what the market was expecting. So you saw a pretty big drop I had my short-term, calls sold against my long-term calls. So I had a 50 strike calls. I sold the 60 strike calls that were shorter dated, about I think 90 days, and I was holding 230-day long calls. So 50 strikes. So that helped absorb some of this, but it was also annoying because it almost basically brought me back to where I was, just because of me hedging it like right here. So that was a little bit of frustration. I kind of kicked myself. So I took off most of the hedge this next day because they collapsed down, and then I removed the rest of the hedge here just because I was not getting much benefit. I got 70-ish% of the premium that I had sold. So in general, you're not going to get a lot more than that. And I had, effectively 80 some days left until they were going to expire. So it would take a very long time for me to get that premium. So I just decided to uncover it at that point because I was hoping for a little bit of a rip back rally and hopefully a resumption of the trend. And we have gotten that for the most part. So you didn't see all the volatility there, which is, highlights taking directional plays is good and bad, right? When you're going in the right way, then it feels great. But when it's not going the right way, it doesn't feel great at all. You can see up $1,190 today. P&L open is now almost back to break even because I had rolled this all over. I switched these to the 60 strike calls after I did all these adjustments, and then I did 10 contracts. So I've kind of talked about this. I think if we get another close above 50, and then that will probably mean I'm up P&L open, I will add to this position most likely. So follow along for that. I will update people, and again, I'm just trying to take my winners and build on them versus dollar cost averaging down. So that's where it's different from stock, right? I would probably dollar cost average stocks that I liked, but when it comes to options and taking directional plays, I haven't really been rewarded in doing that. So that's just part of my own risk management now. You can see P&L year to date decently up on Intel, and it has fluctuated a bit. But so I'm basically going to increase this if it gets over $50, and you can kind of see again my logic here is that I'm up about 6,000, and this was 6,300, and I'm currently risking what I'm up in profit, right? So if I gave all this up, and I have 228 days expiration, I would still just be losing my profit. So while it would be annoying, it wouldn't be any of my actual money, right? It's just I'm playing with the quote unquote house's money, and this is just again part of my risk management and what I would encourage people to learn from a risk management perspective. Again, this is a portion of the capital. Don't follow anything I'm doing. This is for educational purposes only. But this is just how I approach kind of risk management and risk taking when it comes to directional positions. So we will see what happens here in general. Looks like after hours it is actually up above 50. So we will see what happens. Maybe we'll be adding tomorrow. So this is a long-term play. I think it'll keep going. I think I also just spoke on this. Again, I don't have a crystal ball, but it's just how I feel like the market interprets these things and how I think I mentioned Elon Musk was suing OpenAI, and then I was speculating that maybe if he gets any kind of legal traction or anything happens, some of these contracts will either become invalid or they'll get questioned in the market. And I don't know exactly. I haven't fully looked into the whole headlines around NVDA and OpenAI and their commitment and all these billions of dollars that everyone's going to be, giving to each other for AI, which I personally think sounds like a semi-Ponzi scheme. But I know that it is legitimate build out for a lot of stuff, but it does seem a little bit crazy. Either way, I think some of that's getting called into question, and I think some of the benefactors would be Intel. And I think that there's, again, just more positive news flow that can happen if things come out and actually get confirmed with Apple, Taiwan Semi, those types of things. If anything happens from a defense perspective and they're like, okay, Intel's the only game in town and you have to go through Intel, which is, I think, kind of partially their strategy to do, which is why they took a position in it. I think that pushes it higher, whether good or bad. That's the market we have, and that is partially my thesis. Again, it's not a purely fundamental one, but it is a market-related one, and I'm just, again, if the market's confirming that I'm correct by giving me more money, then I will put more money to it, and if the market is telling me I'm incorrect and taking my money, I will put less money towards it in general if it's options related and it's directional. So that is kind of a big thing on Intel. Let's cover all the automations. Again, the MES 111s is what I'm running. I definitely didn't hit my rent last month from the automation standpoint. I think I only ended the month up about $500 some. I need to do a better job tracking that exactly, but I'm just kind of talking about it in general. It's close enough to where I was way off from $3,015, right? And that's where things can happen. The market can move around, and that's why it's not always consistent. You can kind of see with things snapping back today, definitely up more money in general. So, that's interesting. Just noticing, I think it's like beta effective. Anyways, doesn't really matter. So you can see now P&L open up 1,260. So obviously this is the first trading day of February. So I'm already up theoretically on paper $1,260. So that's mostly just from last month. So some of these will start to close. One of the things I want to highlight here is this has been an interesting time for the automations and just these strategies in general, because the average day in trade up until this point was probably not exceeding 30 days. And I'm basically seeing, I think, an average of 40 something days open at this point. So I think my longest ones, are maybe 43 days. But so you can see some are already still open at 42 and 43 days. That's honestly some of the longest I've seen, and it's a lot of the positions, right? There's a ton of these open still. And that's been interesting to see, because usually we've been maybe a little spoiled that it happens quicker as either a profit or a loss. And I guess, over the past few months, it's been mostly profit taking, and it's been much shorter time frame. That's what happens in, uptrending markets in general, and volatility that's declining. So interesting to see. It doesn't really matter. It's just, it prevents new positions coming on because I'm hitting some of my allocation limits. I guess I can go over this. We just added a P&L all time to the dashboard. Zach did. So I need to audit this. I wouldn't say this is 100% accurate, but I think it's more accurate than not. It's probably within $500 to $1,000. So percentage wise and just in general dollar wise, it's pretty close. Because my average account has probably fluctuated around 30 because I move stuff in and out of here in general. So you can kind of see the potential, and this has been open now since May of 2024, actually, when we started testing and beta testing. So more of a long-term idea of what can be generated just from the futures options income. But you can kind of see here, 3 positions open here, 3 here, 3 there, 2. So not as many as I need to have on at the moment. I think only, what is that? 11 positions open at the time. I think I need to theoretically be hitting 20 to 25 positions open, most likely. I take that back. Probably, that's probably accurate. I think at my peak, I probably hit 20 positions open. So things will probably start to come off here soon if we're going to hit some profits. If we do pull back, I think, let's just see where we're at. So this is P&L open. So pretty much nothing has closed this year. So for the past month, nothing has actually closed in general, which is interesting to think about. And you can kind of see if we go in here, all these are kind of still open, and I'm kind of hitting some of my allocation and position limits. So that's why it's not necessarily opening any new trades. So I'm kind of in a limbo here of waiting for things to close so that I can open some other ones. So that's been an interesting observation in general for the automation. What I did want to touch on is this ES kind of short put spread. I've just had it on. It's a long-term one. You can see it's 291 days expiration, and it's done a decent job kind of being a ballast to all these long 111s, because obviously we can see that I am, effectively short this amount of, shares or delta here, and then I'm long this amount. But overnight when things were falling, these were actually pretty close to even, and actually I was technically longer, a little more delta in the overnight session, just because the market was falling a decent amount, and obviously I have gamma not in my favor when that happens. So, but again, you can see this is just kind of a long-term hedge, and my theta decay is only $1.31 a day, and right here theoretically I'm making $103 a day. So pretty good from a drawdown perspective. The only thing I dislike is the fact that I'm technically short more deltas than I'm long, and it can sometimes get away from you if things keep going up and up and up. But as things fell, this was gaining and actually up, let's say $500, and this was only down a couple hundred. So it's almost kept me at a similar ratio of up around $1,100. Which again should be good in the long term, because as it keeps opening, the automation keeps opening these 111s, it's effectively a little bit long, and it's obviously a little bit short Vega. So it's just good. You can see I'm still much more short Vega than I am long, but it does help smooth out that journey. And I kind of just wanted to do this as both an example, but also just because I am leaning long on some other positions, and I just wanted to have sort of a hedge in place and test out. It's almost like I'm creating a calendar by myself, or I guess separately, and just have like a static hedge, because I kind of want to add something similar to that into options autopilot. Obviously we're going to have calendars in general, but I just want to have maybe a separate long-term hedge on, and then it just sells volatility against that hedge. And that is why I am attempting to do this and just seeing how it works in practice. I know how it theoretically should work, but sometimes those things are different. So that is pretty much all I think I was going to share. Gold has just gotten crushed. Obviously, I have been totally out of the gold put spread strategy. Up until this point, I would have, been very profitable had I just been doing it that entire time. But unfortunately, I haven't, or maybe fortunately, because this is probably one of the quickest reversals that I've seen, as you can see here. But obviously, I haven't been doing it since gold was at 3,000 an ounce, and right, it's still at 47.95 after this big pullback and got to 50, let's say 5,600. So I've sat this out, should have been doing it the entire time, but maybe this will be a time to start it up again. As people have described it, I think it's a pretty good description. I think Jeffrey Gundlach, Double Line, said this. The metals and gold in general are kind of proxies for people's confidence in the Fed. Obviously, there was a lot of noise around the Fed and Fed independence. I think that maybe this is a vote of confidence in Trump's selection for the Fed chair to succeed Powell. So this kind of is coming off a little bit. We'll see how this happens and how it moves going forward. But I'm definitely going to keep watching this. I'm not doing anything too crazy with it at the moment. But again, long term, it's good to have multi-asset classes kind of harvesting volatility. I guess last thing I will cover, just to be thorough, is just cover the bond futures, 30-year bond futures. Again, this has kind of moved around a decent amount, and it hasn't really been a flight to safety type trade too much. And I guess now that I said that, I should probably cover oil as well. So again, I'm not doing anything with bonds. I was doing bonds and oil and gold before. But as of right now, I'm just sticking with the index because I think it's a little bit easier to manage. little bit less volatile, I would say. Again, the whole point is low correlation. So these would have low correlations. They're just getting kind of whipsawed around, and so that can be a little bit harder to harvest the volatility premium. So as of right now, just sticking with S&P 500 and trying to diversify with days expiration, and eventually I'll add some other strategies to diversify as well. But that is pretty much it. Hope everyone is doing well, and definitely, follow along. Check out Options Autopilot. You can do a 1-month trial for $45. Code's in the description below. And yeah, we'll see how it happens or how things go. Oh yeah, I was going to just show year to date kind of update. I think we last checked that I can't remember if it was right around here. I know I last remember saying $3,800. Obviously, we're close to 5,000. So 49.92 is our year gain so far, year to date. Decent amount coming from the automated 111s. You can see almost $1,300, and then obviously quite a bit from Intel, but giving up a decent amount on RIVN and SOFI. So again, I'm fine with that kind of trade-off if it's that convex. That's the whole point, is why we're cutting our losses and letting the winners run. But it is easier said than done, as everyone knows. That's why I'm just leaving the automations to automate in terms of the one-on-ones, because I know that'll be a more steady kind of fixed income like return, and I don't want to have my hands in that. I just want it to run, and that's how it will work in the long term. So appreciate it. Good luck this week, and I will do another update probably at the end of the week, see how things have gone and what I've kind of changed about the position, because I am looking to add some new ones that I talked about in the past, but I have not pulled the trigger on yet. So have a good one, and keep your risk managed.